Namaskar and welcome you all on our show on indirect taxes with CA Pranav Kapadia. As you know, he's an expert since last 25 years focusing on indirect taxes, be it Bombay sales tax, be it VAT, be it service tax, and now GST since July 2017. Lot of amendments and changes have been seen in the GST Act, as you all know. And the GST is a very dynamic and a notification driven and a circular driven law. One of the examples is the input service distributor, which is been played with for a while now. We have seen that there was a circular dated 17th July 2023 called as Circular 199, which started or triggered the discussion regarding choice of input service distributor vis-a-vis the cross charge that used to be done between the head office and the branches or branches and the branches, and what should be the right mechanism to be adopted in such cases. This was very what you call recommendatory in nature and spoke about various aspects and gave an option to the dealers to opt for ISD as a model vis-a-vis the cross charge. But in Finance Act 1 of 2024, there was a huge change which was brought in the section 20, and it was said that this will become effective from 1st of April 2025, wherein the cross charge would be ruled out in various cases and ISD will become, or the input service distributor rules will become effective, and one will have to compulsorily adopt to ISD in certain cases where there is a central credit and there is a distribution of central credit, and one will not be allowed to use the cross charge, as we say, in certain situations. Even the rule number 39 of CGST Act is going to be amended with respect to these changes. So let us take an input one by one from CA Pranav Kapadia on what are these changes, how they will impact us, and this will remain simple, easy, and lucid to understand for the CEOs, CFOs, directors, finance managers, tax managers of the companies, so that they can use it as it is and they can take home lot of input from this video directly. So we'll keep it less section based and rule based and case law based directly, but we'll keep it fluid and easy for everyone to understand, as we always do. So we will start with the questions one by one on this topic of ISD. I think this is going to impact a lot of companies who have multi-state presence, who have branches in other states, who have offices in different states. And nowadays, this is becoming a common practice. And companies are having lot of common services which are taken by the head office and then over a period of time getting distributed to various branches for their use. So how will this actually work in the ISD situation? Let us take the questions one by one. What are the nuances of this particular circular which had come, circular number 199? Let us start from there and then jump into the changes in the Finance Act. Pranav bhai.
Yes. Hello, everyone. Yes, as Mitesh rightly told, GST is a notification and circular driven law. And being a new law, there are many, initial changes, or, government is trying to streamline so many things. And one of them is input service distributor. Input service distributor is not new under GST. It was there even under the excise regime, wherein and especially linked to the service tax regime. And what is an input service distributor? So that input service distributor is an arm of that company. It can be either the HO or the branch. which receives certain services, which are input services on which tax has been paid. That tax is not only attributable to where that invoice is received, it is attributable to that location as well as to other locations. Or it may be attributable to one particular location or multiple locations. And so that the credit flow from where this invoice is received is getting distributed to the other locations where the service is actually utilized. Finally, where the service is utilized. And that is why this is called as input service distributor or an input service distribution process. It is only applicable to this input services. It is not applicable to goods. For goods, we know that we already had stock transfer concept even under the VAT regime, even under GST. There is a separate concept for when goods are transferred from one branch to another. There's a tax payable. But since service is being intangible, it cannot be identified, or the borders cannot be, we cannot identify from one state to another how the services are moving. So that is why they have come out with this concept of input service distributor, so that everything can be aligned. There is a system, a process, how to value it. And that is the entire process of input service distributor. Now, this input service distributor is there in the GST law as per section 20 of the CGST Act, existing since July 2017. The only thing is that this section mentioned that the input service distributor may distribute the input tax credit, and that is why a stand was being taken by the various taxpayers that it is an option and it is not mandatory. At one place, they have mentioned that the input service distributor shall distribute the credit by issuing a document of so and so nature as per Rule 54. That is a invoice through which that input service gets distributed. Okay, but since the basic rule was optional, many of the companies were not following that. Let us understand one more thing. A basic essentiality for distribution of input tax credit is that the taxpayer needs to have a separate GST registration number as an input service distributor, wherein say all those invoices come into that specific ISD registration number, and from that they are distributed either to the HO or to the branches in their respective regular GSTN number. So if an input service distribution is to be done, that input service distributor will have to take a basic separate GST registration as an input service distributor. I think we can take up an example over here of, what could be such a input service which can be utilized. Say there's a company which is doing, it is taking AMC services from various service providers for its plant and machinery which are located at different locations. That for the maintenance of those plant and machinery, there is a AMC which is provided to a particular company. Now this AMC, say it is a pure service AMC, and the contract is done with the head office. Now there could be a plant which may require that AMC. There could be another location which could be office which may not require that AMC. Then there could be one more plant which could be again a different plant. And say there are 5-6 locations over there. But the invoice which is issued is being issued centrally. The contract is being made with the head office so as to get all concessions of one single billing or bulk billing from the head office for those services. And that is why most of the companies, they try to take it under one single billing in the head office, and from there they distribute. So that is how this input services. So that particular service provider will bill it in the ISD registration number of the head office, and from that ISD registration number, that data will be auto-populated in GSTR 6A of the taxpayer. Normally, if it comes under the regular GSTIN registration number, it comes in table 2A, GSTR 2A. GSTR, we are used to checking GSTR 3B with GSTR 2A, but we are not used to checking GSTR 3B with GSTR 6A, which is for the input service distributor. So it would come in that specific GSTR 6A, and then the distributor, ISD distributor, has to distribute it through GSTR 6 to the locations where it wants to distribute that credit. So that is the entire basic mechanism of GSTR 6. I think Mitesh was on the question of regarding circular. 199. So, but I went into a little background of this. Right, Mitesh?
Yes, yes. We were talking about what is the circular 199 exactly talking about, and what is the mechanism that it is providing for deciding upon the ISD registration requirements.
Correct. So, Mitesh, for that, again, we need to understand one more concept of cross charge for moving into that circular, because that circular is clarifying the positions between ISD and cross charge. Now, what is a cross charge? Basically, I think there is no definition of cross charge in the entire act or rules or by notification anywhere. It is something like a Cadbury. It's a chocolate. Everybody says it's Cadbury. It is actually internally generated services. So this internally generated services is the word which is coined in this circular number 199. And what are these internally generated services? Let's again take this with an example. Say there is, okay, and first let's understand that there is a rule uh, um, that when any goods or services are provided by one distinct person to another distinct person, that is a person who is registered under GST with the same PAN but having different GSTN number. That is, for example, a head office at Mumbai and a branch at Delhi. Both have the same PAN, they have different GSTN number, and hence this rule becomes applicable to such persons who are having the same PAN but different GSTIN. In short, a head HO and a branch in different states. So whenever any goods or services are provided free of cost, without any consideration, by the HO to the branch, then it is deemed to be a supply. There is a mechanism which is provided under Rule 28 how to value that supply, and that value of that supply will be the deemed consideration between the head office and the branch, because it is deemed that certain services are provided by the HO to the branch. Okay, so that is the basic concept, and that is how this point of cross charge has come up. That okay, for goods there is a stock transfer. For services, the word which is used is cross charge, where any services are provided by the HO to the branch. Again, there's a fundamental question that whether the HO is actually providing any services to the branch or it is not providing any service. It is in the regular course of business that the HO has to provide support to its branch. So whether at all cross charge is applicable or not, that itself is a big question. But nonetheless, the law has prescribed that there will be certain charge. The circular 199, which Mitesh is talking, is also talking about it. Earlier, in 2018 itself, there was a Columbia Asia Hospitality AAR and then a AAAR, wherein this question was put up before the Advanced Ruling Authority, and there the authority has told that okay, there will be a cross charge because the head office is providing accounting services, payroll services, HR services, or various other services to the branch. So those services need to be valued. There will be a cross charge which will be applicable. And then this matter, has got along, and then the government is also trying to levy tax on such deemed valuation of services provided between the HO to the branch. So, so I think that is the basic concept of cross charge, which again it is a challengeable thing, but I think now the government has realized that, and the challenge again therein was that how to value it. So whether the cost of the employees who are working, there may be one employee who may be looking after various companies, or within that employee may be looking after various branches, and there may be a rent of the head office which may be paid, in which these employees are sitting. So whether that needs to be considered, whether any other cost needs to be considered, how do you value the cross charge was a big challenge, or is again still a challenge. Is again a challenge. Then how to value the services of the director who is sitting at the head office? He may be getting a big salary. How do you value that? Whether it is to be included or not to be included, and whether the director is providing the services, whether the director is providing any services to the branch, or he's just, he's the head and he's in control of that branch. Whether the CFO is in control of that branch, he's not providing any service. He has to control that. So all those issues were there. And to resolve those issues or to at least minimize those issues, I don't think there's any resolution. Under GST law, nothing is getting resolved. It is just trying to reduce the litigation impact. And in line of that, this circular 199 has come, Nitesh. So in this circular 199, what is being sought to clarify is the first point which is getting sought to clarify that whether ISD, okay, no, so now, okay, before again coming to this point, the point is that now if there is a ISD also, there is a cross charge also, there was a debate which was going on that whether ISD should be done or cross charge should be done or whether both should be done or whether any one will suffice. So that was the debate which was going on, which is still going on. Here the government has clarified only one thing in this circular 199, which is that they have clarified the position that ISD as per section 20, which I told in the beginning when we talked about ISD, is that section 20 ISD is optional, it is not mandatory. So this one good clarification has come from the government that ISD is mandatory. ISD is optional and not mandatory. ISD being optional does not absolve the person from his liability of charging under cross charge for internally generated services. Okay. Okay. So I think that is one. The first point, Mitesh, which comes up over here is that ISD is optional and that is clarified by this circular, and this will remain in force right from July 2017 till 31st March 2025. The circular will remain fully in force qua this point till 31st March 2025. From 1st April 2025, ISD is becoming mandatory. Okay, so I think this is one thing. So wherever ISD is applicable, ISD will become mandatory from 1st of April 25. Till 31st March 25, ISD is optional, and that is a good sigh of relief which is given by this circular that it is optional. Yeah, Mitesh, you can ask.
What are the parameters that were set in the circular 199 and how did it set apart ISD and cross charge? And what were virtues of things which were taken into consideration in this circular? If you can give some more ideas on that, because that is ultimately going to become a mandatory truth from 1st of April 2025. So it is critical for everyone to understand that.
Right, right. So, so one thing which I already mentioned is ISD is optional till 31st March 25. That is clarified by this circular. The circular also states that whenever a cross charge is applicable, that cross charge will be applicable in its place. So whether ISD is mandatory or not remains at its place. Cross charge, if applicable, has to be levied. Okay. Now within that, they have come out with one more clarification, which is already there in the rules, and they have actually clarified so that to reduce litigations. Two major things they have clarified here. One is that in case of cross charge, as per rule 48, rule 28. So see, so what is the mechanism of how you value the services under cross charge? That is through rule 28. It is either the open market value, because since there is no consideration, how do you find the deemed consideration? So for this deemed consideration, rule 28 is there. Rule 28 gives us the options of either it is the open market value or similar services or like kind of services, or not, then the cost of services plus 10% margin, etc. So that is how these valuation rules are designed. In that valuation rule, rule 28, there is a proviso, second proviso to rule 28, which says that if the recipient is eligible for full input tax credit, the value declared in the invoice will be deemed to be the value of the consideration charged. So this provision was already there. But again, there was confusion who is eligible for full input tax credit or not, and whether this will, and people were really agitating on that. So many representations had gone from the industry to the council, and rather they have mentioned that based on the representations received from the industry, they have come out with this circular. And in this circular, they have clarified that in case if the recipient is eligible for full input tax credit, then this rule 28(2) will apply, and hence whatever is charged in the invoice, that will be deemed to be the value. So one clarification further, as per the rule, only that clarification has come, but it is a welcome clarification because so much litigation is going on how to value this. Then second clarification which has come over here is, in case if the value of in that valuation which is made for cross charge, if there is any salary cost or employee cost, if that is not included in the value of cross charge, that is also okay. So that is a major relief. In that they have bifurcated into two parts. One is if the employer, so basically the deemed value as taken in the invoice is accepted where the recipient is eligible for full input tax credit. But there can be another situation where the recipient branch may be dealing into exempted goods, it is not eligible for full input tax credit. Or maybe it is, no, so full input tax credit is not available to that branch. If that is the case, then you cannot have a, whatever value is charged in the invoice, that will not apply. So that provision will not apply. So there you will have to value it. In that valuation, the clarification has come now that the salary of employees need not be considered in that valuation, because I think that is the major chunk. That is a major chunk in that valuation. And if that is cross charge, the recipient branch will not be eligible for the credit, and it will be a loss and a cost to the company at HO level or at branch level. Otherwise, this is always going to be tax neutral. Whatever is being charged by the HO to the branch is eligible for full input tax credit. It is just a compliance because the law says so. Under service tax, there was nothing like this because there was no deemed consideration. Okay, when services are provided without cost. But since such a clause has been provided, hence to grant relief or to reduce the hassles that charge GST and take input tax credit, the government has come out, okay, you may not charge it and you may not take the input tax credit. So that has been given, but a big relief has come by way of this salary to employees which is paid. Say the accounting function of all the branches, say in 10 states there are branches, and all the centralized function is being done by the accounting team. It could be a huge cost. So that cost need not be added to the cross charge value, and that is the biggest relief which has come in this circular.
Great. So
there is one more, because you can ask, there is one more aspect we can take up that.
So moving on to Finance Act 1 of February 2024, which is going to be effective from 1st of April 2025. What is that is becoming mandatory or compulsory in the given scenario of change after knowing the change coming from 1st of April 25, how people covered, or you can say affected by this kind of a situation should react or act, and what should be the process that they should follow to make sure that they are in lines with the change that has come.
Correct. So yeah, correct. So if the companies are not yet registered under ISD, of course they are aware of all this provision. Those who are not yet registered, so they should note one thing, that from 1st April 25, ISD registration has become mandatory, especially with respect to input services which are attributable to, could be common input services which would have to be divided amongst the other states. So, for example, if a AMC invoice from a service provider is received at the HO, and which is to be given only for the Gujarat branch. So now the company will have two options. Either it does not take into the HO, or if it has to take into the HO, it will have to take a separate ISD registration number, and through that ISD registration number, transfer it to Gujarat, or alternatively, plan it out, if possible, take it into Gujarat directly. So that could be another method of, but it depends on how the entire gamut of transactions, how the input credits, how the invoices are happening, how the, entire monitoring control activity of that particular company is there. It will depend from case to case. You cannot generalize it everywhere. So each company will have to analyze their positions, how they want to take up this ISD. But if they, so either they take the invoices directly in their respective branches, then that will not be an issue. Or they will have to ensure that they take it in the ISD registration number and pass it through that to the branches. So that is one thing. Each company will have to take a separate ISD registration number. Generally, it happens at the head office. We have seen a few different kind of cases wherein it is a service provider company. The company is having it at HO. All the billing is happening for those services from the HO itself. It has branches in other states which are only, point of contact or used for communication. They are paying rent for that. And there they have taken ISD registration number and they are transferring that through ISD to the head office, because it is attributable to the head office. That entire expenses, although it is received over there, because all the billing is happening from the head office. It could be a different model, but that needs to be checked and analyzed at every point of time. But yes, once ISD becomes mandatory, these things will have to be evaluated.
Okay, perfect. So a lot of preparation, registration, planning, and relooking at the contracts and structures that you have started with your suppliers and vendors, and changing the arrangements if required, or doing systematic planning so that you don't lose on your cash flow or your ITC either in such situations is very important. So please reach out to appropriate consultants or experts in this field. This is an educative video. As I am giving a disclaimer, we would keep these opinions as our personal opinions and not as the opinion of the firm. And we would request, or rather solicit your attention that it is important to consult someone with all your situation, your different objectives of the business, your business model, and other such details and facts, and take a professional guidance on this before taking any final call or concluding on anything with regards to your ISD or any other GST related matters that are discussed in this video. Last question, Pranav bhai, with regards to the RCM. In RCM also, there are certain services, security services typically gets covered under RCM, where as a recipient, the company is required to pay the tax in the reverse charge. In such scenarios, whether ISD will apply or how it will be treated.
Correct. So a good question, Mitesh. And this is one of the provisions which has now been specifically included in the newly substituted Section 20, which is going to come from 1st April 2025. This point was not specifically included earlier. And now they have come out specifically that in case if any services, tax on such services is paid under reverse charge mechanism. Say in the example of security services, as you mentioned, or it could be input of services, which could be attributable and distributable to the branches. Then in such cases also Section 20 empowers the input service distribution of the taxes paid under RCM of such services received. Basically, such services will not being in the nature of B2B transactions. See, for B2B transactions, like our GSTR 2A 2B, which we have for regular taxpayers, there is a GSTR 6A for the input service distributors because it has a specific different GST registration number. And those B2B transactions which are intended for a particular ISD registration number, they come and fall into the table, into that GSTR 6A and not in the 2A 2B, right? But input service, but for the services on which tax is paid under reverse charge mechanism, they not being in the nature of B2B transactions, they don't come and fall automatically either under 2A 2B or under 6A. So for them now a specific provision has been made and a mention has been made in Section 20 that the such services can also be distributed through GSTR 6 itself. It can be distributed. On this distribution point, I'll just like to mention, because companies have to prepare themselves of how to distribute, how much to distribute. There's the rule 39, which gives all the processes when it is to be distributed, whether the ineligible credit is to be distributed or not to be distributed. So I think in short, if I can mention that all credits which come into the ISD, they need to be distributed, whether eligible credits or ineligible credit. And it is not only about the invoice. In case if there is a debit note or credit note pertaining to that transaction, a tax debit note or a tax credit note, which is pertaining to that transaction, then the ISD distribution will also change accordingly in the that GSTR 6. So that also will have to be taken care of. Then in what proportion it is to be distributed. So where it is identified that a particular service, input service is for a particular location, it will go to that location directly, that full amount. Where it is between, say, 4 locations, it will get allocated in between those 4 locations based on the turnover of those 4 locations vis-a-vis the head office and the total turnover. How to calculate that turnover is also provided. What will be the relevant period? Say if those 4 locations were there in financial year 23-24 as well as in financial year 24-25, or say 25-26 now. Then, okay, you have to see the previous year. But in case if a 5th location is opened, say in October 2025, say in the new region, in October 2025, a new branch is open and earlier 4 branches were there all along. Now the 5th is coming. So then how to, because being a new branch, it does not have a previous year. So turnover of previous year will not be applicable. And all the 5 branches were also not there in the previous year. So there's a special provision again in the rules which says that for that month of October, say the example is of October, correct? Then you need to see the quarter of July to September, the turnover in all the states wherein all these were present in the previous, that needs to be seen, and based on that, the input service would be distributed. So again, so lots of calculations will also be involved, because there could be situation where some branches get, they become functional, they become non-functional, or sometimes turnovers are different in different months in respective branches or during the previous year. So all those points will also come into factor, but those rules are there. It is all procedural part, how to do it, but the companies will have to take care for that also.
Superb. So a lot of inputs have come in on various aspects of this ISD, which is going to become mandatory from 1st of April 2025. We also give a lot of tips on and simple ideas on how you can plan things for yourself in the advent of change that is coming very, very fast. If you have multi-state offices and multi-state presence, and how you should structure your transactions, or you can say how you can set up your deals with the vendors and suppliers of such services which are going to be forming part of the ISD type of transactions. Also, how returns will get filed, how input tax credit will be claimed, and so on. This is just a brief idea and thought. As I told you, it is an educational video. We conclude here, and we invite you all to be part of our YouTube channel. Subscribe for more such videos which are of relevance to you in various domains of finance, tax, accounting, and audit. And also share these videos with relevant people in your network who would be benefited from these thoughts and ideas. Of course, you can come back to us on your questions through writing it on the comment box of this YouTube channel or any other social media that you are following us. Thank you very much, and we will be with you again on other such interesting topics and changes.